Hi there, this is Keith Singer of Singer Wealth Advisors. Now, I know a lot of you investors out there may choose active money managers because you're hoping they're going to beat the market. Unfortunately, beating the market can be elusive. Not one of over 2,000 actively managed stock or bond funds significantly and regularly outperformed the market over the last 5 years, according to the New York Times. In fact, for the 20-year period ending in 2021, less than 10% of all U.S. stock funds beat their benchmarks. However, for investors in the know, there is a way to actually beat the market automatically without any additional investment risk. This past September, also in March of 2020, while the S&P 500 was down significantly, our firm negotiated with one of the world's oldest banks to issue a 5-year growth note linked to the S&P 500. In September, the one we issued, the terms of the note were as follows. At maturity of the note will mature at par value plus 1.6 times the growth of the S&P 500 index. In other words, after 5 years, if the S&P 500 had gained 70%, the investor would receive 60% more than the gains of the S&P 500. In this case, that would be 102% gains versus 60% for the actual index. Now, the bank uses derivatives to hedge the transaction and create a note for the investor. If the index ended up 20% lower in 5 years, the note would mature 20% loss, just as if you had owned the actual index. Now, one caveat is that owning a bank note does subject the investor to the credit risk of the issuing bank, which investors in the S&P 500 don't have. But in this case, our clients were happy to accept that small additional risk so they could significantly outperform the S&P 500 in anticipation of the index bouncing from the recent market correction. Now, if you're more conservative, these notes can actually be designed to reduce the risk of investing without reducing returns. If investors simply want to match the returns of a major index, they can do so with downside protection. For example, we could design a note that will match the returns of the S&P 500, but if the market drops 20%, the investor loses nothing. So a properly structured note can give investors more reward with less risk. If you're interested, give us a call at 866-WEALTHY or go to our website at singerwealth.com. Looking forward to talking to you soon.